Hello, good morning, and welcome in. Welcome to Good Morning NASDAQ. It is 8:45 a.m. on the 14th day of November, 2023. I am Dom, running solo for the first half. Huddy should be joining me around 9 a.m. And, talking to him right now. And we'll get into it. How's everyone doing out there? It is a beautiful morning here in Michigan. The sun is shining. It is quite cold, but that is what November is all about. Very soon it will be snowing, and I'm not looking forward to that. I got Joseph in the chat, Ramon, Simon, Ashish, El Jefe, Eric Incy. What up? What up? What up? Haven't talked to you in a while. What up, Eric? JJ in the chat as well. It is Tuesday. Pretty slow day yesterday. We did have one runner continue that we talked about here on Good Morning NASDAQ. TENX did continue higher yesterday. Went on a pretty insane run. Another one of those cheapies starting to make some noise. We'll see if that trend continues in the coming days and weeks. We're going to let some people filter in now. Make sure when you come on in, you hit that like button. Make sure you're subscribed to the channel. Hit that notification bell because we do go live every single morning, Monday through Friday, 8:45 a.m. right here on the channel. Generally, I am joined by a co-host, a cohort. Either Kyle, Huddy, or Jack usually joins me. Sometimes they're busy. I know Kyle's been traveling. He was at Traders for a Cause over the weekend. Huddy is, I have no idea what time zone he's on. He said he would join me at 7, so I'm assuming he's 2 hours back. So he's somewhere on the western side. But welcome in, welcome in. This is Good Morning NASDAQ, a pre-market prep show where we talk all about small caps in the stock market. We go through the biggest gappers, the biggest percent movers. We analyze them, go through the news, go through any potential fundamental dilution, and potentially talk about what we want to do with them if they are intriguing enough. We do answer your questions as well if we have time towards the end, so make sure you're popping in the chat and telling us how you feel, talking to other friends in there, and asking any questions that you might have. We also have a webinar today for 4-leaf clovers over in the room. If you want access to that, make sure to hit the link in the description. Get yourself 7 days of Clover trading for $7. You'll have access to multiple webinars a week with all of us. And you'll have access to video lessons, all the Huddy and Dom archive video lessons, trade alerts, watch lists, the whole shebang. All right. Salini in here, top of the morning, fams. The blessings in the wake up, 100%. All right, it's 8:50 now. Let's take a look at the biggest gapper on the day, because we have a 178% mover still going up as I look here. BCDA, Biocardia. I feel like it's an oldie. Let's go back on the daily chart. You know how we roll here. We start with the daily chart. We go back as far as we think makes sense. And we're just looking for any bits of resistance, looking for this volume down here. Any important days, we're not, as a small cap trader, not really interested in the day-to-day of a stock, looking for little moments when the stock had the eyes, the attention, the volume, the range, and clearly had this 286 level up here on volume that the stock topped out at multiple times. And then going back further, it's all the way up near the $8 area. Something happened here recently in July where the stock gapped down from $2 to $1.35. But for today, let's take a look at what's making this stock go. Got to put the whole pieces of the puzzle together to build the full picture and decide if it's something worth trading or worth keeping an eye on. It's a biotech stock, 18 million float. Right up here, we're using Dilution Tracker, which is a great website that kind of puts everything together for you when it comes to the fundamentals. It gives you news, gives you info on the company, and you can go through the filings as well. An hour ago, Biocardia announces FDA approval of CardiAmp, heart failure 2 protocol for autologous cell therapy for ischemic heart failure. It also reported earnings, it looks like 5 days ago. See if I can't find what led to that gap down. Not quite seeing it. All looks to be decent news. Okay. All right, let's head into the dilution, see if there is any. Like I said, 18 mil float. They have 0.5 months of cash left. Overall risk is medium for dilution risk. They got warrants at 630, 675. This stock is $1.19 a share right now, but just about to hit the 200% mark on the day. So not too worried about those warrants up there. There's an ATM from April, $352,781 out of the 10.5 million originally. And then a couple shelves. All right, let's take a look at the chart again. Like I said, some big volume here. Sometimes it's easy. You always hear Jack Kellogg talk about your lines. See where the stock has topped out, where there is some overhead supply, where the stock might run into trouble if it gets to. History of a decent run back in 2020 from the 280 area all the way up to 8. Kind of a choppy, not great looking run back here that topped out in the 280s. And then on this day it topped out the 280s, was a perfect double top with some sort of PR or something, gapped into that level, faded off, and actually broke through new lows in the following days. So not a great history of run. We do have one time where it did get volume and went on a pretty good move. So kind of mixed results when it comes to chart history there. Don't love this gap down here, but I'm sure you're going to have a lot of people looking at this like a gap to fill over the 130 area towards the $2 area. Not the smallest float for a stock up 200% on the day at a dollar a share. So 18 mil. I'm not going to say the word safe, but it doesn't ring the alarm bells of a stock that is up 200% and there's a 800K float. So pretty clean. Still over 100 and something percent away from that 285 resistance. Let's see what the morning looks like. Strong mover ever since the news came out. Started in the 45-cent area all the way up to $1.20. So another one of those starting off in that mid-range 30 to 70 cent area, going on a big move. Relatively clean chart though, underneath that 285 area. Not one that I'm really interested in buying. I'm not really interested in buying stocks up 200% in the day. For me, I really stay away from day one gappers on the long side just because I feel like there's so much I can learn from them going forward, and I really would rather focus on multi-day moves. So if this stock were to become interesting and still be in play on Wednesday, Thursday, or Friday, having today's action, having tomorrow's action would be able to give me a lot of information on what to expect, how many shorts are involved, how interested buyers are in longing and chasing high day breaks on it. But when it's up 200% in the day, I feel like a giant move has already happened, and I'd be rooting for an even crazier move to happen. And I don't necessarily have an edge for that. In terms of shorting, I'd rather sit back, be patient, understand where the key level is, which is that 285, and rather hope that it pushes towards that, because at that point it would be up like 300 or 400% on the day. You'd have massive resistance overhead. I would keep an eye on that volume because we're already close to 30 million on the day, and the volume from that supply is 65 million. Well, that volume isn't even from the top, but the top is set there, and this volume day was at 285. So the volume might overtake it, but that would be an insane move to go even higher than 285. But with a higher float and pretty clean, besides a small ATM dilution, I'll probably just stay away and watch this one as entertainment for the morning, unless we were to have an insane 100% move out of the gate into the 2 to 280 area, have some sort of hard crack and lower high, and maybe it'd be worth taking a try for some sort of mid to late day fade. But out of the gate, just nice to see that we have a gapper of that magnitude, and we'll kind of see if that can kind of ignite the small caps for the week. All right, the next one, which one of you brought up, AIRE, up 70% on the day. I think I saw this one last night. Let's take a look. Relatively fresh chart. Okay, I'm going to have to dig into this one. Apparently topped out at 570 and is all the way down towards $10 now. Just been on an all-out fade. Let's dive into the company for a minute. AIRE. I just did something, broke it. Realpha, 4.1 million float, real estate services. 22 days ago. Direct listing on NASDAQ. 13 days ago, commercial launch. So this is pretty much what looks to me just like a fresh chart, gotten beaten down off of its initial. Where's the chart? Got beaten down off of its IPO and is just now sitting on the bottom. And at some point, dip buyers came in. Maybe some shorts got squeezed yesterday when it popped back up. It looks like it ran a little bit on last Monday. Had a move from like the 9 area towards 13. So much range on this chart with how much range there is from the highs to the lows. So that can definitely play a role in it being kind of difficult or choppy. Probably also interests a lot of people thinking that there's hundreds of dollars a share of range in either direction or to the upside direction. So maybe just kind of a bottom bouncer yesterday that caught fire, lower float stock, and topped out at 18 and is now just kind of mid-range in the high 9s. So I'm sure you have a lot of people thinking any pops towards this 13 area where the pre-market highs are and the after-hour highs are, and then the top and after hours is 17 on decent volume, more than we're doing right now. My guess would be that this fades off. It's already had its kind of insane squeeze from the $4 area towards 18, an insane move in such a short period of time. Looks like reality might just set in. On the multi-day runners that we generally trade, maybe it takes 4 days for a stock to go from 1 to 5, and it takes a lot longer for it to come back down to where it came from. These stocks that do it so quickly, it's a lot easier for them to round trip. The whole process of that multi-day run happens in the course of hours, and so people get worked in and out relatively quickly because of how much money is at stake and how big the range is and how much you could potentially lose or make so quickly because of how far the stock's running. So right now we're cracking through that support. We're now heading towards the low 9s. Not anything I'm all that interested in. Like I said, I'm really interested in small cap runners, vehicles that have a story, whether it starts with a PR, shorts getting squeezed, multi-day run where I can have some history. Pulling up a stock, this is not a daily chart I'm all that familiar with, especially with the range on it. This seems like someone who's a lot better at reading tape, maybe more reactive type of fast-paced trader. This just feels like, it's been since the crazy move, basically all of after hours and pre-market. So kind of its own little market time there. I'll leave this one alone. I think odds favor fade. And if it does have any sort of spikes, there's a lot of resistance to play off of for short sellers from the 12 all the way up to the 18 area. So I will probably leave that one alone. Won't give that one much of a watch just because it's not our typical type of trader. And for those reasons, I don't think it's going to really come into play for me down the road. Maybe if it were to set up down the line and continue to hold and build and set higher lows. I just don't think that's all that likely. But if we're talking about it again in multiple days, maybe it's something I'll reevaluate. Selene says, I woke up at 3:30 to short AIRE at 4 a.m. My broker had no shares. I was tight. I don't know what that means. Maybe that's I don't know. Maybe I'm getting too old. I'm guessing it's bad. He's unhappy. But yeah, I'm sure this is the type of stock a lot of people want to get involved in. A lot of range to the downside, still up over 100% from where that move started yesterday. JJ says, in regards to BCDA, on the daily chart, we talked about this big gap down here. He says that was they paused phase 3 trial back on 7/24, and that's why it's dropped. Okay. Selene says, yeah, he wasn't happy at all. Okay. All right, let's see if there's any other gappers this morning. I only see one more that's over 40%, but we do have one from yesterday that we've been talking about quite a bit. INVO, this is like the third day in a row we've talked about it. Let me refresh myself with the news here. Oh, this one that had that funky warrant stuff on dilution tracker. This is the one that had that weird merger. And then INVO reported earnings last night. So this is kind of a multi-day breakout over the $2 area. We talked about the initial run back on 1023 where they had those warrants at the 280 area. Oh, Huddy's joining me. Let me let him in. Jim?
Hey, Jimmy.
Jimmy's
Good
here.
morning.
Welcome in, Huddy. I was telling them I have no clue where you're at. Just that you told me it was 7 a.m. there, so you got to be west. You were at the airport yesterday morning. Where have you been?
I've been kind of traveling the West Coast for the past week, kind of on vacation mode. I was in Vegas right before Traders for a Cause, hanging out with some of the guys there. Then I went to Austin, Texas for the weekend, and now I'm in Scottsdale. Back in the dirty Dale.
All right, back in your stomping grounds.
Yeah, back in the old stomping grounds. Staying at my friend's house right now, so I don't want to be too loud. I'm outside kind of walking around in the backyard. But I was looking at some of the gappers this morning just before I got on this call.
Okay, talk to me.
Weird ones. AIRE and INVO.
Yeah, we just got done talking about AIRE, and I just started on INVO. So if you have any thoughts about AIRE, let's hear them.
Yeah, I was just looking at it. Look, IPOs are not my specialty, and I don't think it's an IPO. It looks like it used to trade under a different ticker before October 23rd, and they have some like warrant purchase agreement that I didn't have enough time to look into, but in back of my mind, kind of thinks that there could be something going on that's hidden in the filings that should be uncovered. Something about how if that price that it opened at on the day that it switched tickers was less, like 90% less than 460, is what I was kind of reading. It triggers some kind of event where the warrants are going to get reduced. I don't know what price they're going to be at. It was like a lot of reading just for 6 a.m. But could be an interesting situation for liquidation. I don't know for sure. Like IPOs really always confuse me because all the information is so fresh, but it doesn't really look like an IPO.
Yeah, there's a lot of 424Bs from the last month. Yeah, I basically said the same type of thing. Like and the range is so weird. Like it did it really go to 575? Yeah, I just basically said that same thing. It's not my specialty. It's not a daily chart I'm used to seeing. This range is insane. It just kind of looks like a bounce off the lows. There's no news I can see from today or yesterday. Just kind of a mini little short squeeze. But
yeah, probably best to just let it trade out and see how the price action reacts to whatever this gap up is.
Yeah, this is basically fading from yesterday after hours where it went to 18.
I didn't even see that.
Yeah, that's
crazy.
basically where the move was. But INVO was the next one.
Okay. Well, at least the
What?
big gap.
What? Do we lose Jim?
Jim's back.
Okay. Yeah, INVO, kind of a multi-day breakout over the $2 area. Still have that resistance overhead that topped out around 3 from a couple weeks ago. They had earnings last night right at the close, I believe, and the response was positive because the stock is now holding above 2. This is kind of an interesting one because you do have the multi-day breakout aspect. You also have one that was trickling off under its lows through all support, gapped up, kind of at this point absorbed that gap and had a nice, decent green candle yesterday. It's kind of a lot of conflicting factors. You also have the dilution overhead at 285. We're only 50% from the major breakout level at 3. Probably the type that I would want to stay away from due to all those factors. But generally speaking, I feel like these are the ones that if they do get volume, they can be explosive because there's still a world where you have some short stuck from yesterday or the previous day because this was kind of a random, it looked like it was left for dead after topping out at 2, fading off and closing the low ones. Then yesterday, kind of having a strong spike back into resistance and then kind of holding up and ABCDing into the close and then getting that perk through the breakout level on earnings. Definitely one to keep in mind going forward. Um, I don't really have a plan for it because if I was, if they didn't have the earnings and I was really interested in buying, I probably would have rather been playing off of this 150 to 170 area. And now that we're gapping over the breakout, buying off the breakout level has never been something I specialize in, especially right out of the gate. I know Huddy likes to buy the afternoon, so when they're kind of gapping through the breakout level in the morning, it can kind of make it feel like you either have to make the decision in the first 30 minutes if you're buying or not. And I will most likely stay away from this, but it is intriguing nonetheless if this bounces towards 3 and then spend some time, up there.
I mean, the whole reason that I don't like buying breakouts in the morning, especially when they're gapping up over the levels, because they will often fail. Uh, you know, so that's kind of the issue there. If the gap up is too big and you have any kind of buyers that were in that 150 to 160 zone that are waking up to a 220 gap up, like they're going to be selling. They don't want to play the game of like, okay, well, let's get to 3. Like we already achieved better prices. So I kind of expect to pull back out of the open and failure. Not really something I would short because I don't really want to short an earnings winner. Regardless of what the earnings numbers say, if the reaction was positive, I think it's like kind of an uphill battle to be fighting. And we've seen a lot of them be kind of a struggle lately. So not really something I'm really interested in shorting. The most important thing I'd be doing is, again, just like AIRE, just like going through the filings and figuring out the bigger picture here. Like what's the status of those warrants? They have an upcoming meeting on December 23rd. Like what are they discussing? Are they reducing more warrants? They are. So it's not something I'm immediately shorting, but I do want to, like, as it continues to grind and create this chart action, I do want to have a Word document open about what is their financial situation, what is their filing situation, because it is an interesting one. It is much more in our ballpark of what we like to play in terms of small cap. But I agree, it's kind of like in a funky spot to really want to play it either way. Again, like I think this gap up fails, but I'm not really going to short it because I don't want to short an earnings winner unless I was really certain that they were, the best shorts are like when there's dilution and like news is regurgitated, right? Or there's no news. And like in this situation, there is something that's propelling the stock forward. The warrants that were at 285 were not that many. I imagine that most of them got converted back when it spiked into 3. There's only like 3 million, but and it traded like 100 million shares. So we'll see. I think you're probably right, Dom, too, that there are some shorts that are stuck from the past 2 days, kind of treating the stock like a bounce short into the 2s with wide risk. And now that it's back up into the 220s, they're probably like, oh man, do I add verse 3 or do I let it get to 3, right? So we'll let them play that game and we'll just sit back, relax, and, understand the most we can about the big picture before really formulating like a plan. That's always the best.
Yeah, but it's nice to see some continuation over the last few days of another gapper. We had another gapper yesterday that ran pretty good out of that low price range. TENX went from gapped up from the 15-cent area into the 30s, ran all the way to the 70s before gapping down now 22%. So that's kind of unfortunate, but what you expect, A, from this market, B, from low price tickers that are kind of inherently a little poopy. But also when you have that type of move happen so fast, when I pull up this chart, you can just see how big of a run that was and how much it moved in such a short period of time. Very hard to sustain it in these types of markets. Never a problem taking profits when you're getting 50, 60, 100% moves. So at least nice to see a low price stock run.
So Tanks is something that I did a good amount of research on last night. Just digging into the company. It's one of those like culprits that I've traded many times in my career, which is why I got kind of interested when I saw that it was up 300%. There's nothing too dilutive here that's currently in play at these levels. So that's not really a red flag. But if you go back on the daily chart and go back like 20 years, you'll see that they have been the victim of many reverse splits that have changed their prices to astronomical levels. Which
they're the victim of them?
Yeah, they're the victim of them. And that's usually like, I like to short stocks that have, reverse splits like throughout their whole history of price action and a bunch of dilution. They don't have a bunch of dilution, but they do have reverse splits in their history. So, and if you look at all the reverse splits, like any kind of big volume day is not followed with a multi-day run. It kind of just like one and dones. So, that kind of like it leads me to believe that this could just be a one and done. Obviously the news reaction was positive and there's no dilution. So it's not something like I'm jumping out of my chair to short, but if I do get the right intraday price action while it's still red and the pattern is there, then I would be kind of curious about taking a short if it makes sense.
Yeah, and I'm guessing that would look like some sort of strong spike towards 60 cents.
Yep.
Okay. There's a couple tickers. I don't think we're going to like them. Someone said thoughts about LIFW for a long. Um, yeah, so kind of the same thing we've talked about in the past, and I'll hammer home again. Um, I am interested in trading stocks during their life cycle, and the life cycle includes stocks gets on radar, stock makes some sort of move higher, whether that's a breakout or extension or multi-day run, like you see here on LFW from 3 to 18, has its first red day, has its fade, has its pullback, has its backside move. Stock reverses off that, still part of the backside, bounces, and then fades off into oblivion. Sometimes they bounce back. Sometimes they become a liquid and go lower. Sometimes they go sideways. Whatever it is, until LIFW makes a move, at this point we are, what, 200% from the breakout level? We're so far from the breakout level, and that's the level of resistance I want to play off of. I'm not really interested once the first green day has already happened to be playing this range down here because I don't know how it's a predictable edge once we've had 4 or 5 days since the first green day has happened, let alone the day that it set the top. Your question was, when is the right time to buy? I won't be buying LIFW. It's already bounced multiple times now. If you pull up an intraday of it, we've had the first green day. We've had mini spikes pretty much every morning. But in terms, at that point, all that really tells me now is there's just so many layers of resistance on a stock that has to go so far to get to the breakout level. Not something that I have any predictable edge on buying down here. It's just not a pattern for me at the end of the day. And that's really the question that we all need to ask ourselves before we take any trade is, what is the daily chart pattern? And I don't have one for LIFW here. Thoughts on ASTR breakout? This is so Huddy, remember we were having the argument about FEMY a couple months ago? And I was like really in my head about whether it was a breakout or not. This is the type of this is the type of chart I was envisioning in my head. This ASTR type of move where you have a big gap up, it sets a top, and then it just holds up there. Is it really a multi-day breakout? And Femi proved that it was a little different, and it had the massive daily chart resistance that it held as support. It had more eyes. The volume did come back in on the day it reattempted to break out. But ASTR is kind of the one that I see more often, and where I think it's just a delete the chart and forget it exists, because if it goes up, it's going to be stupid in a liquid. If it goes down, you're going to lose money on it. It's just, and this was the one that had the weird news, wasn't it? Something with a merger or I don't remember. Or they had weird dilution.
Pretty sure ASTR used to be an OTC stock.
Astrospace?
It might have been. I might be.
Oh, this is one that has that 65 million ATM, but didn't go down, and then it's just super, super liquid. And I was watching Trading Tickers last night, actually, and I was studying up on his reversal pattern. It's very similar to my first green day. And one of his rules, it has to do with liquidity on the day previous. And I think that kind of thing comes into play here as well with ASTR, where the volume, it's not like, I'm okay with volume dropping off in between big moves, but I don't think it should go dormant. And I feel like ASTR has gone dormant. It's being manipulated. Whatever this gap up was, it's completely absorbed it. There's no real interest there. No one's trading it. No one's stuck. And it's just sitting at this new level. And so this is one that I really wouldn't call a multi-day breakout. Even though, even yesterday, I think it did break out technically over those highs and then just get stuffed and come right back in. These ones are headaches. They're ones that take your attention away from real stocks. Even if it does work, unless this were to have massive volume in the 150s, and I mean massive, prove to me you're doing crazy volume, this is not going to come anywhere near a list of mine.
Yeah, I agree. If you look at Femi, the breakout was, I kind of remember it, but it was 49 million shares by the day end on the day that it broke out. So if we're kind of comparing that to ASTR, yesterday's the day that it did technically break out, and it broke out on 2 million shares. So that's your biggest difference right there, right? There's not real interest like there was in Femi. Charts are kind of similar, definitely, but just not the same volume components, not the same range, not the same gap percentages. So there are some nuances that differ, and ASTR definitely not one that I really want to play for a long either.
Yeah, those are ones I
like
just feel
ever.
like, especially in slower markets where it's you saw Jack's rant in the Clover room last week, like precision, waiting for the best of the best, making sure the stocks that you choose to trade fit all the criteria that you have for them for your setups. And it just comes down to what that really means is avoiding a lot of noise and stuff like ASTR. You know, even if it's taken me years too long to learn that, uh, there are a lot of avoids out there in the market. All right.
Yeah, kind of have to be kind of. Go ahead.
No, I was going to close it out. So if you got a closing message.
I was just saying, you kind of have to be careful because this recent bull run, over on the overall markets, if you want to pull up the SPY or the Qs, like obviously we've seen a lot of strength for the past week and a half, and a lot
Hmm.
of the reason why I haven't traded much is because it really hasn't reflected into small cap like you would kind of expect. There's almost zero correlation. The things that are actually moving are the big cap stocks. There's a lot more like higher price stocks on my scanners. Uh, and that's an interesting nuance to take up like interest in because it's like I think normally day traders are thinking like bull run, like okay, there's gonna be a lot of small caps that are running, and sometimes that does happen, but this time it's just that's not the case. So again, I'm still being very weary about just small caps in general, and trying to buy them right now. It just feels like there's going to be a lot of failures, like exactly what Jack said. Just got to be careful with breakouts. That those have still been very far and few between that I've actually set up properly and like really worked, like on decent volume. Like what the last ones we had, I mean, maybe ASTR, HUBC was freaking terrible. Um, ICU, like there's only been like three in the past month and a half. So like that's kind of like controls most of my cadence, right? Don't get fooled just because the market is strong means that small cap has to be strong. We still really haven't had like multi-day big runners, gappers, the whole likes. Like we were seeing in October. October was really hot. Huge, mega runners. That was sick. And then it like stopped as soon as like the end of October hit. So it's a lot of the reason why I'm just like on a very patient cadence. Again, just doing all my research, filings, fundamentals, understand the big picture, and like only take trades that really make sense, where all the puzzle pieces come together and it clicks. It's really easy when you can do that kind of research in this type of market.
Yeah, and that's kind of the whole debate. Would you rather have started in a bull market or started when things are hard? And I feel like these type of markets are really good on teaching discipline because what you said, like if you're waiting for the best of the best, where all the stars align, every bit of criteria is there. It has the range, it has the multi-day move, it has the volume, it has the shorts, it has the news, it has the sector, it has the overall market momentum. Like those trades are easy and they fall right into your lap. When sometimes you can get into the habit of working too hard to find edges in the game that aren't there, and you're just you end up just spinning your wheels and not going anywhere. When all you have to do is sit back and wait for those 3 to 5 opportunities every month and make sure you execute when the time is right. And maybe soon or one day another market will show up where there are 5 trades a day to be had, and you're even more prepared. And that's where you make your exponential jump in your progress and your success. Yeah, all good things
That's
there.
all. That's all you have to do.
Yeah, that's it.
Just identify the 3 to 5 best setups, nail them, and move on.
Hey.
I will say, I will caveat that with not all the stars have to align on every single. Like there are obviously A plus setups, B plus setups, and C plus whatever setups, and each one probably deserves a different type of sizing for that individual trader. But just being able to identify, right, and filter between, and like I do think there's a world where a trader does have to practice their forehand and their backhand, and like you can't go the whole month just only expecting to trade 3 times and expect to actually nail something if you're out of practice, right? You can't play an NBA playoff game and shoot your first free throw for the whole season and expect to make it. Uh, so you do have to, keep the fingers warm and like keep the eyes like kind of ready, and be willing to take B minus setups and just wallet pads, right? Just be able to adjust the size and understand what you're actually trading. Kind of like how my idea on tanks today, right? I don't think it's A plus. It's not something I'm going to try to put like 200,000 shares into, but it is something that I might go after to try to make like 1 to 3 type risk reward if it gives the opportunity, and then move on. And I don't think it's an A plus. I don't think all the stars are aligning there. It'd be a whole nother conversation if it was gapping up another 100% and there was massive dilution and they regurgitated some news. Like that would be way more interesting of a setup to me. But for now, like I'm still gonna, keep an eye on there. And again, if the stars are aligned, like it's not perfect in terms of the fundamentals, but if it gives me the right price action intraday, I'm gonna go after it. As like a B plus, B minus type of setup, and use adjusted size for that type of idea. So
Yeah,
not 3 to 5, but maybe like 10 to 15.
that's a lot.
That is a lot.
I think
I think
there's a fine line between keeping the fingers warm and
oh yeah,
over
definitely.
trading.
All right, let's wrap her up. I know you got to go downstairs and get to your.
Hey, you know me. All right, everyone. Thank you so much for joining us on another episode of Good Morning NASDAQ. We hope to see Huddy's face here soon, besides just Huddy with 3 exclamation points. It looks like he changed his Zoom name. We want to thank you guys for being here. If you want more access to us, like I said, there's a webinar today. If you want to get in the room and double or triple down on your education, a lot more than what we offer here on YouTube for free, get the link in the description. We do a 7-day, $7 trial. Get in there, get access to everything, study everything that's on the website, and make your decision if you want to join the Clover community for good. Make sure you hit that like button on the way out as well. Helps the algorithm, helps our relationship with management. You know the gist, and you know that we will see you again tomorrow morning right here on YouTube on the Clover Trading channel for Good Morning NASDAQ at 8:45.